11/15/2012. Good morning to the SMF followers and traders around the world and MMTs that are in here making markets every day. We are going to take a look at the SQQ ProShares Ultra Short Fund, which when we take a look at these funds, we go back to calendar 2010. They were way up here at $300, believe it or not. That was back in the financial crises. And basically, part of the 5-year structure and part of the calendar structure of the original part of the financial crises that started in beginning of calendar 2008. That's a 4-year gap in between there. And one of the things is that a bear fund is a fund that makes money called the SQQQ, and there are various other bear funds that make money. On this other chart here, this is called a bull fund, and it provided such a wonderful move back in calendar 2010. They were bottomed out, and it's called a TQQQ. And every time that we get down to the bottoms, it's a great ETF to be long the market in a diversified manner. One of the things that we are going to show here is that on this daily chart, on the bull side, we're all the way back down here, slightly above the calendar 2012. We are filling in a gap here. Now, I will put both of them together here. And when you look at the bear fund in the very short time frame is at a major wall of resistance in this very current cycle on this very calendar date. Whereas if you take a look over here, the bull is extremely oversold along with the broader indexes and equities. Due to the election, before the election came out, we have what we call a fiscal cliff. There is a thing that markets do, and it's called tax selling. The Dow Jones is well down over 1,000 points off its high. The Nasdaq Composite has got a 10% correction, which is bear market territory. The S&P 500, which is hitting down at key technical levels as well, is short-term oversold in every one of these indexes now. Based on who was going to win the election, whether Romney was going to win or Obama, we know that he did, is that right now there's a major conference going on in Chicago with lots of hedge fund managers, mutual fund managers, and they're giving their opinions about the market. What we have going on in this particular correction to reach bear territory from extreme bull 5.5-year highs in calendar 2012 with the summer rally. Now we're going into the closing part of the year, and look at where we're at. We're in bear territory. Now, back in September and October, they kind of bucked the trends, and some of what you're seeing now in this month of November is what happens in asset allocation models in September and October. They kept rallying it up, but now what we have is a very deep, short time or short period of time oversold. One of the other factors when we take a look at fear indicators such as the CBOE VIX, which is related to the S&P 500, we definitely, once again, are lagging the fact, even though that people are selling, because right now people are not believing that we're going to have a tax resolution. People are selling out on a lot of positions and taking profit and locking in this lower tax rate in the last part of calendar 2012. We are given the major update. We had called for a bull correction. A bull run has corrections. Well, this has gone way past the correction. And now the tables have changed. One of the things that's lagging here is the fear indicator in the VIX has not had a blow off top. It's still historically low in these areas. So once again, when back in 2008, the VIX went clear up to 80, that was extreme fear. The higher it goes, the more fear is in, and the lower end of the markets put bottoms in. It's been a very long time in calendar 2012 that these particular fear indicators, such as the VIX, have not played their role yet. You can see when we got up to 28, when we had our first correction in 2012, we peaked from the lower end of the bottom. Once we put the top in, the pullback and the summer rally started right here. When that peaked and it went down in value, this is when the summer rally started back in June 1, June 4 of calendar 2012. However, this is that particular consolidation here. One of the things that we look at as well is the Nasdaq 100 and the Nasdaq Composite also have the Nasdaq 100 Volatility Index. It too, unlike the VIX, when we put in highs up here at around 28, we came all the way down, and that's when the summer rally occurred. This particular index is still at historical lows. When the financial crisis started in 2008, that fear went as high as we had never seen in a long time, for a long time. We had other peaks in 2010 when it peaked. But every time the fear had peaked, we had put the bottom in the Nasdaq and the Nasdaq 100. And we went straight down and we had great rallies. 2011, which was 1 year ago, right around this very time, these things were shooting up in fear. And markets were putting in bottoms in November and December of calendar 2012. And we had the big bull rally. And when these things go down in value, when they peak, markets put in their bottom. One of the things that we can say mathematically is that some of these things have been skewed. But there is a lot of room. If we continue the tax selling and there is no resolution to the fiscal cliff by year end, people are selling now and going to ask questions later. It reflects in the Dow and all of the broader indexes and individual equities such as Apple, Google, Priceline, CMG. All of the bellwethers that were up at their all-time highs have corrected. So we're going to throw both of the fear indicator update. We're also going to let you know that it has a long ways to go and there could be a lot more selling. Now, granted that in the very short term, it wouldn't take much for those things to hit a capitulation top if the selling continues. What I will say, just like bull runs, and I've always said, when am I shorting the bull run? When it's extremely overbought. But when am I going to buy the bull run is when they're extremely oversold. The thing that's going on right now is you can stay oversold for a period of time, just like you stay overbought for a period of time. Remember, there are lots of various ways to make money in these markets when there's lots of selling. So the bear is winning on one side and the bull is losing on the other. This is the TQQQ, deeply oversold. This chart here is the SQQQ, which is the bear funds, and there are other bear funds that we will cover going forward. At some point, November, December is the month that stocks love to rally and or markets get bottoms put in. It's the strongest 2 calendar months of the year in the broader Wall Street tape in a calendar seasonality period. One of the things that we would love to tell people and to understand is that the Dow Jones has come down to 12.5. That is where when you broke 12.5, we seen 10,500. You got to go back to the financial crises where these levels were being tested, and now we're coming back and testing them again. What we will tell people is that on an individual stock pickers basis, the ones that are the most deeply oversold, with any resolution in the tax policy, can the Republicans, Can the Democrats, can Congress work for the public? So far, people are not believing that that will happen. The things where Obama says he's willing to work with the other side and the other gentleman saying we're working the other side, they're still not there yet. What has happened in the last years, of the last 4 years, is that Congress can never come to a resolution. And that both sides bicker, fight, and do everything else. It's not good for the bull. What needs to happen is they need to come to a resolution. That's all good and well. That's all of the rhetoric. The selling continues. We even said the Dow could drop a quick 1,000 points if it looked like Obama and the taxes were going to go higher. Hey, the people voted for him. Now they have to live with that. Now, what I am going to tell people is that in the very short term, we're overbought. And you can get overbought in this. And if we break through these, we're going to go higher. We are probably going to be getting lower to the lower end of the markets. And stocks like Apple, again, have made extremely lows. And I'm just giving a broader market update here at 11:21 a.m. The thing that I want people to understand, whether you're in extreme overbought or extreme oversold market, we always deal with those factors. And right now, we're on sell in some of these names. Before, it was a race. Was Google going to get to 1,000? Was Apple going to get to 1,000? Which one of these two were going to get to 1,000 first? But how about this? Which one of the two get to 500 first? 705, we've almost dropped 200 points here. Google had a 775 high, and it's almost, you can see it's down 130 handles. 90 lows today. People are going to continue to do their tax selling until their business is over. One of the things that we can say is that fear caters have not played their role that would say that we're totally at a bottom part of the market. But individual equities are just as deeply oversold as the broader indices and various sectors. The bellwethers are going to be individually picked on a stock picker basis that are the deeply oversold valuations that they are and that have the biggest reward moving forward. There is a tremendous amount of money on the sideline. If there is a resolution, the money will move back in. StockMarketFunding.com has covered this from the very calendar day of 2012 as to what these analyses would be before the fact, not after the fact. What you should be looking for and how you could get yourself out of harm's way. We told people as a courtesy, with free updates as a courtesy, because everyone that has engagements in financial markets, you need to know that we do care about you. Otherwise, we wouldn't be telling you before the fact so that you would have something to think about and or position yourself. Either by one of two things. When you have those great bull runs that this market hadn't seen at 5.5 years highs, it was time for you to ring the cash register across the board, and that's exactly what we told everyone. The thing about it is, when markets fall, you make the same amount of money when they go down in value. I can tell you right now on the Dow, in the last couple of weeks, since the election, you've got like a 5% haircut in the S&P, you got 6% haircut in the Dow, in the very short time. But we are in bear market territory, 10% corrections in here. We are getting to a point where we will get sold out. However, I will tell you there can be a lot more tax selling. This is just the beginning. The one thing that needs to be established in this analysis is that you have to remember, in calendar 2012, we had that great part of the rally up to that reversal. Then when we pull back, the bull, mutual fund manager, underperformed. Hedge fund managers underperformed. So when you take the amount of people that were on the sideline that did not participate in this bull rally, that money is waiting to go to work. It is. Therefore, if a lot of them weren't in the market, we could hit an area of deeply oversold where a lot of that tech selling could be out of the way. There are people who hold positions for many, many years. As far as a bigger mutual fund community goes, they can still do more tax selling. But because of the lack of participation of bulls in calendar 2012, we can probably hit the lower end much sooner than much faster than we would at any other time because of the lack of participation on the bull side. They will sell, like I said, and ask questions later. Ringing the cash register, then figuring out what Congress wants to do. If things come out favorable, then we're going to put a bottom in and we're going to go higher. That's between now and year end. 2013, though, that's going to be a separate issue and a whole new issue. And we'll be dealing with those issues as we move forward. So, for the broader people that are in the markets, that have whatever kind of holdings, you want to give it careful thought as to what's happening in your government, within the government structure here in the USA. There are a lot of headwinds. You got Israel acting up. You still have Hurricane Sandy, which will provide some stimulus to the economy because they're going to have to rebuild that whole Northeast area that was totally whacked out from the storm. It's called disasters, and you have to rebuild. So, we will continue to update. We will continue to hold the shorts as long as that side of the tape and the tax selling is working. The thing about it is there's not that many bulls, so the tax selling could end quickly. The only other issue that we must be aware of is what the bigger, broader mutual fund community who's been holding these equities for 3, 5, 7, or 10 years, what are they going to do compared to the shorter, longer term hedge fund community? They're going to sell quick. And people are not liking what they're hearing. I thought Obama said that he's willing to work with people, but Wall Street isn't buying it. They're not buying it. And the old saying is, sell and ask questions later. We will be getting to a period of a very deep oversold market. We would look for a pop if we can get the resolution. We get a pop going into year end, and then that will be it, and we'll reevaluate. We will also be doing major updates on Saturday on various different bears, various different bulls. There's more than one. There's all kinds of bear funds out there. Some are levered 3-to-1. You get paid. So that's our major update as far as where the broader markets are relative to the U.S. government and the tax selling issues and the amount of a correction that we've had in the Dow, 1,000 points. Hell, it went down 1,000 points a lot faster than it went up. So when you look at the broader bear market territory that we're in now, you would be able to count on what I'm telling you is that a lot of it has been contributed to tax selling already to where we're at right now in the lower end of the market, meaning that, hey, a lot of it's already happening and has happened. So we'll be monitoring how much more will follow. Stay tuned for the market update.